Hey everyone, welcome back to Corporate Decoded, the place where we try to crack open the corporate world like a really tough nut. And speaking of nuts, get ready because M2i Global's latest report is a real mixed bag of critical minerals and, well, let's just say things are still a bit mineral deficient on the financial front. Alright, so we're diving into M2i Global's quarterly report, their Form 10Q, giving us a look at their situation as of May 31, 2025. Stick around as we break down what these numbers really mean for the company's journey. And hey, if you like getting these kinds of straightforward insights from corporate filings, make sure you subscribe. We also have a super helpful Discord community linked down in the description below. You should definitely check out. First off, M2i Global is positioning itself in the critical minerals supply chain, aiming to support the US government and its trade partners. They've got plans for mining, processing and refining, as well as recycling metals. They've even struck up some partnerships in 2024 with Komodo Capital and NTM Minerals Limited to help secure critical minerals like copper and build out that supply chain. They are even looking at a strategic minerals reserve. This sounds forward thinking and could be a big deal if they pull it off. Now let's get to the nitty-gritty, the financial tables. Looking at their balance sheet for May 31, 2025, we see their cash balance has dropped significantly. It's down to about $12,500 from around $80,000 back in November 2024. That's quite a dip and not a huge amount of cash to be playing around with. Their liabilities are also quite substantial. They have about 1.9 million in accounts payable and accrued expenses, and another 1.3 million in accounts payable and accrued expenses specifically from related parties. This means they owe a lot more money than they currently have in cash. And when we look at their accumulated earnings or deficit, it's a really big negative number, over 8 million negative. This tells us that the company has lost more money than it has ever made since it started. Moving on to their operations. The statement of operations shows us their revenue and expenses. For the 3 months ending May 31, 2025, they reported zero revenue. And the same for the entire 6 months ending May 31, 2025. They did have some revenue in the prior year, but currently there's nothing coming in. Their operating expenses for the 3 months ended May 31, 2025 were about $1.1 million, which is less than the prior year's expensively driven by higher professional fees, likely for consultants helping them with this big shift in their business strategy. And with no revenue coming in, it's no surprise that they're reporting a net loss. For the 3 months ending May 31, 2025, the net loss was over $1.1 million. And for the 6-month period, it was nearly $2.5 million. When we look at the same 6-month period in the prior year, their loss was around $2 million, so their losses have increased. Now, let's look at how these operations have affected their equity. We can see in the statement of changes in stockholders' equity that they've been issuing a lot of new shares to raise money. For example, in the 6 months ending May 31, 2000 and the 6 months ending May 31, 2025, they issued over 40 million shares for cash and another 30 million shares for services. They also have plans for issuing another 10 million shares for cash and another 30 million shares for services. They also have plans for issued over 40 million shares for cash and another 30 million shares for services. They also have plans for issuing another 10 million shares for future services. This is how they're trying to fund their operations, by selling more ownership in the company. The end result of all this is a very large negative stockholders' equity, or what's called a deficit. As of May 31, 2025, this deficit stands at a negative $3.7 million. That means, based on their books, the company owes more than it owns. The cash flow statement really highlights where the money is going. The company used about $780,000 in operating activities during the first 6 months of 2025. This is similar to the previous year, where they used about $784,000 for operations. But look at the financing activities. They brought in over $712,000. This mainly comes from issuing shares for cash and for other services, which is how they're keeping the lights on. And as we saw on the balance sheet, their cash at the end of this period is just over $12,400. This is a serious cash crunch. Digging into the notes, we see the company's big pivot. They used to be in mobile apps, but now they're all about critical minerals. They even mention a strategic partnership with Komodo Capital and an offtake agreement with NTM Minerals Limited for copper. This new direction could be a game changer if they can actually execute it. This next note is super important. They explicitly state here that their limited revenues and significant losses raise substantial doubt about the company's ability to continue as a going concern. This is basically a polite way of saying they might not be around much longer if they can't get more funding or start making money. Then we have the related party transactions. It seems like a good chunk of their operations involve dealing with people close to the company. They've got consulting agreements with their executive chairman and CFO for about $43,000 a month, and also with their president and CEO for a similar amount. They've incurred hundreds of thousands in expenses for these agreements, and a good portion of it remains unpaid at the end of the period. This is where things can get a bit dicey, as these transactions need careful oversight to ensure they're fair to all shareholders. Looking at management's own discussion about their financial state, they admit they had zero revenue for the first half of 2025. They anticipate revenue might increase significantly as they try to implement their new business model. They also reiterate that their operating expenses are expected to go up with expansion. And here's a big red flag in their controls and procedures section. Management has concluded that their disclosure controls and procedures were not effective. They specifically point out material weaknesses, including not having an audit committee and not implementing appropriate information technology controls. This lack of fundamental controls is a serious concern for investor confidence. Finally, we have the certifications from the CEO and CFO. While they're certifying the accuracy of the report, the previous discussion about ineffective controls and material weaknesses makes these certifications a bit hollow. So what's my take on M2i Global's situation after digging through this report? The company is clearly in a very early and risky stage of trying to execute a major business transformation. Their pivot into critical minerals sounds promising in theory, especially given the current geopolitical climate and focus on supply chain security. They're actively seeking partnerships and issuing stock to fund their ambitions. However, the financial reality is stark. They have minimal cash, significant liabilities, and absolutely no revenue to show for their efforts yet. The fact that their accumulated deficit is so large and growing, coupled with management's own admission of ineffective internal controls and material weaknesses, paints a picture of a company fighting for survival. They are heavily reliant on future funding and successful execution of their new business model, and the jury is still very much out. The related party transactions also need close monitoring to ensure they benefit the company as a whole and not just a select few. What's your take on M2i Global's strategy and their precarious financial footing? Let us know your thoughts in the comments below. If you found this deep dive valuable, give this video a thumbs up. It really helps us out, and subscribe for more corporate breakdowns. Don't forget to join our Discord community, linked in the description, for even more discussions. Thanks for watching Corporate Deco, and we'll see you in the next one.